All right, just wanted to wish you and your family a very happy Thanksgiving. And this is the time of year where we really give thanks. And I want to say thank you for being my student. Thank you for watching these video lessons. You have no idea how many students I have who don't even take the time to study. They just want hot pick after hot pick. And that's not going to get them very far in life. And that's sad. So I really do appreciate it, for you to take the time and watch these video lessons. So for this video lesson, I want to go over something very cool. First, I really think that you should take us up on this 50 to 70% off sale on DVDs, certain DVDs and newsletters, especially my new How to Make Millions pre-sale DVD. It's going to be ready in the next few weeks, but for now, it is 70% off. It looks like it's going to be 22 to 24 hours of instructional content, not just me, rambling, but actually a definitive, comprehensive guide to my strategy, websites, brokers, tools, when to trade, position sizing, loss, risk management, level 2, charts, mistakes, lessons from my top students, and lessons from other millionaire traders who aren't necessarily my students. So I really think that's going to be amazing. Spikeability is also on sale right now for 50% off. We're going to have a teaser in a little bit, and it basically focuses purely on stock spikes, when to buy them, how to anticipate them, when to sell them, and sometimes when to short sell them. So very excited. And then we also have several other DVDs, Penny Stocking Part 2. Nate's Tandem Trader has a ton of live trades. Textbook trading is great. Timline, just fantastic. All of these DVDs offer something. And then we have all these newsletters. And I want to give a big Thanksgiving shout out to one man in particular. He has Super Alerts and Super Pro here. You can see you can save 49 and 53%. But he just had a monster pick in BDR, and he was buying it at $1.15 today. It nearly hit $3 a share, so it's his latest double. And this one guy, Dundalo, made 6,000 on BDR, changed his life, and that is freaking fantastic. And today I want to give special props to my longer term pick, my latest longer term pick. Those of you who are subscribed to my Small Cap Millionaire newsletter know I am long MAGS from the low fives, and today it rebounded quite nicely to 557, and I really think it's going to test 6 or maybe even break out. This is the time of year that I really want you guys focusing on earnings winners, especially when they break multi-year highs. You can see here this had resistance right here at 5, going back to late 2011, resistance again in early 2013, and when it's broken it and come back down, but this time it broke it on the back of superior earnings. And they also have new products, RoboGuard and CyberSeal, which every time they announce a contract, this stock is going to spike 50 cents or $1, maybe even $2 a share. We have a nice cup and handle brewing here, and once it breaks 6, it's game time, and I think this can really surge. So congrats to all of you who are in the low fives. We're finally doing well. RESN was my last longer term pick, and this one did just fantastic. And I traded it better long term than I did short term. I had long term and short term positions here at 7. I sold my short term for like 20 cents a share profit, and I sold my last longer term position here at 9 for nearly $2 a share. So congrats to those of you who are in my long-term newsletter. But more importantly, I want to talk about earnings winners, because earnings winners are, you see what I've been buying again and again and again, sometimes on dips, sometimes on breakouts. My latest earnings winner today was MCOX. It didn't finish at 358. That's a typo. But you can see that it pretty much spiked right at the beginning and then was sideways and then spiked and then faded a little into the close. If you look right at the close, this is a typo. This is what I hate about some penny stocks. They never traded at 358. Somebody just put it there to make it look bad, maybe make me look bad, because I'm in at like 380-ish. In hindsight, should I have booked a plane? I've been traveling today to get to Thanksgiving. Should I have booked a plane that definitely had Wi-Fi? Yes. But, this stock, I want to give it some time because it's a former runner and because earnings were actually pretty fantastic. So if I had Wi-Fi, I probably could have sold here at 410 and made 30 cents a share, or, $700. But at the end of the day, if you look at what it's done in the past few years, it had a big spike once upon a time from 2 to 7, and here we are back again. And I think that this could really run. The volume is low, so it's not like I'm like, oh my God, this is definitely going to go up. But it's one that I think can break back to the low fours, if not the mid fours, or even the high fours or low fives. I think this is kind of like an RESN, MAGS type situation where it went up too far too fast. And the low volume, all it takes is like one big seller to push it down. But I'm basically break even right now. I'm up a few cents a share. ODP is another earnings winner. And this one, Office Depot, this is not necessarily my kind of play at all because it's a multi-billion-dollar company. But if you remember, I was buying it here at 612 on the dip after the first day. ACCO is another office product play, and I was buying it here in the low 8s, and now it's in the low 9s, so that was cool. WETF was my biggest earnings winner, dollar-wise. I was buying it in here in the mid-13s, and it went all the way actually up to the mid-16s. This is why I love earnings winners. This is specifically why penny stock earnings winners are so great. It's not just about their numbers. Don't be fooled by ugly bald men on CNBC. It's not about how good the numbers are. You can have atrocious numbers, but maybe those atrocious numbers are already priced in. And when you have these underfollowed penny stocks, WETF isn't exactly a penny stock, but BDR is. This Superman nailed it. Superman was buying it right in here, and he anticipated the great earnings. And I had a chance to buy it here at 170. In hindsight, yeah, I probably should have, but I hesitated and I missed out. But this is the beautiful thing about underfollowed penny stocks, because even if they report good earnings, you can see here it spiked from $1.25 to $1.75 on the back of good earnings, and now it's gone up an extra dollar a share after the earnings. So don't be so concerned. I get emails from everybody like, oh my God, Tim, there's so many earnings plays. I just have to, know them all ahead of time so I can anticipate and buy them before other people. And that's not right. That's not what I see really works. Use the first earnings win, the first spike up in reaction to earnings as your guide, and be like, wait a minute, this stock just spiked on the back of earnings. Because we see all these other earnings plays that spike for days and weeks afterwards, we know that these now have legs. So for you guys who are just starting, or some people who just want to play earnings winners, look for them only after they have spiked a lot. MCOX, I wasn't watching it today, okay? It was one of hundreds of companies that was reporting earnings. I picked it up because I found it via the biggest percent gainers of the day. I read through the earnings report. I saw the reaction. It was a very good report and very good reaction, and I think it's going to have legs just like MAGS. And just like ODP, ACCO, WETF, MXWL was another earnings winner I bought in the low 10s. Or was it right in here? And it went down to like 980 for a day, so I cut losses. But then it went to 12, and it's been holding up. So it's not an exact science. But I do think these earnings winners can really, really run. And that is what you guys should be focusing on after they report earnings. A good example is Vigil. This is a very controversial stock, and you can see here it spiked. Its latest spike was from 2 to 4 on earnings. Let me just zoom in so you can understand what happened here. They reported earnings on this day, and it was already up, from it closed at like 160, and it was already up at like 250. I was on a plane that day too. That I did have Wi-Fi, although it wasn't very good Wi-Fi. And I bought it on the intraday breakout, or anticipating the intraday breakout at 252. I bought 25,000 shares at 250. Because my Wi-Fi was so bad, I sold. I didn't even think it would go to 4. I thought that it would just go to 3. So I sold. I made roughly a quarter a share. But it went all the way up to $4 that day. Then it came down, you had a follow-up spike. And now it's come down, and you have another follow-up spike. Every single company, no matter what the numbers are, people are ripping on Vigil's CEO because he's kind of weird, but he's also a billionaire. So if you meet a lot of billionaires like I've met, they're all pretty weird. That's not necessarily that you should judge them or look down on them, because guess what? They've made it and you haven't. A lot of people are just jealous. And trust me, I know about that. But when you have just a terrible financial company. You know, VGGL's type financials are just terrible. And their whole business is very questionable. That said, I'm not buying this company at 252, and I also actually bought it. I tried to anticipate the bounce right here at 287, and it got up to the low threes, but not much more, and I sold. And then the next day it went to 4.5. So I was a little too early. Well, I was on the right day here, but I sold off a little too early because of my situation. And then I was a day too early buying this dip. But both times I had the right idea. And the right idea counts for a lot because we're very rarely going to be perfect in our timing, very rarely going to, buy a stock right at the lows and sell it right at the highs. If you have the right idea that, guess what? This earnings winner can keep running. Maybe I should buy it on a dip, no matter that they're losing money and it's, questionable whether they're going to survive over the next few years. Just treat them like the stocks that they are. And that means that buying them on every single dip, buying them when they start to run, because these stocks can run and run and run no matter what a lot of the noobs and the haters and the poor people on Twitter say. These companies are going to be stronger than your average other company because they've reported some kind of numbers, whether they're good or bad, that people have liked, that then people have judged that they liked it by buying the stock, and that's why these stocks spike. So long story short, use these spikes to put these stocks on your watch list. Do not watch a stock like Vigil when it's downtrending every single day. It doesn't even matter that it looked like it, put in some bottoming signs at 150. You have a lot of companies that downtrend like this and they put in some bottoming signs and then they just keep going down. And every single, wannabe bottom is just a way to lure you in. The thing that should have put this on your watch list, the event, the catalyst, was the reaction to good earnings. And then feel free to even buy it even when it's overextended like I did at 250. A lot of people thought, no, there's no way. It's already up from 150 to 250 on the day. But I knew better and I had the right idea, and I'm glad that a lot of people, also bought at 250, 260, 270, and they rode it better than I did to 350, even 4. It's not a bad thing when my students do better than me. A lot of people think that this is a competition. Guess what, guys? I've already made over $4 million trading, okay? I don't care about being like, oh, I have to make another million before anybody else does. In fact, I trade with a very small account. A lot of people say, Tim, you know so much. Why have you only made 4 million over all these years? Well, I trade with a small account in order to teach. And in early 2015, I'm going to trade with an even smaller account so that you guys can really understand how to grow a small account from scratch. So I'm not trading with my whole net worth. I could probably make 2, 3, 4, maybe even 5 million a year in trading profits if I just traded and didn't teach. But I like teaching. I like passing this down to you. I am up nearly $1 million in trading profits this year. It's my best year ever. But at the same time, understand why I'm doing this so that you won't be confused. A lot of people think that I should go in bigger and on every single position because, theoretically, I can. I could easily buy 1 million shares of Vigil at 2.5 and sell it at 4 and, make $1.5 million in a day. And that would be fantastic. But I wouldn't have gone that big. Earnings winners are good, but I wouldn't go that big. I'm not going to, try and say that I know everything. All I'm saying is that buying earnings winners after they've already spiked, if they are ideally near a technical breakout, BDR, I got to bring up again and again. Here's a 1-year chart. It spiked up here to the 170s, 180s, but for a day it actually came back down. The third day is when the optimal time to buy it, when it broke this former high of 180-ish, 185-ish. And then it went up, $1 a share in a week. Same thing with MAGS, MAGS. You had time to buy it. This multi-year breakout, a lot of people thought that I was crazy for dip buying it, but this is a cup and handle. And once it breaks over this early 2013, late 2011 high, I think it's going to test this 6.5 and this 6 level again. So look for past highs, look for stocks that are spiking big based on good news, and understand that I don't short these. they're always buys on, breakouts and on dips, ideally if they hold support like mags did at 5. Happy Thanksgiving. Take advantage of the sale, guys. Seriously.